Hey everybody, Tim Lemoine, brokerage manager at Risk and Insurance Associates. Thanks so much for joining us. We've got Ryan Tracy with us, wholesaler on our platform. We're going to dive in today to long-term care. Hot topic with us, especially this year going into next year. Ryan, let's just start at the beginning. Who's buying long-term care policies? Talk to us about that demographic, that age demographic, and what are their concerns, when you're having these conversations with clients?
Yeah. So typically we're seeing people, individuals or couples between the ages of 50 and 70 is generally where we see people looking for long-term care coverage. Middle-class families to upper middle class or wealthy families looking to protect their assets, or not become a burden on their loved ones if they need care.
Yeah. And so many times I've had conversations with clients after they've gone through a long-term care event with their family, or they're in the middle of one and they say, geez, I don't want to have this happen to my family, my children and loved ones to take care of me like this. It's tough.
Tim, that's a great point. Typically the people, when they come in looking for long-term care, it's because they've had a family member or a loved one need care, and they saw how expensive that was, or they were responsible for providing that care themselves, and they saw how time-consuming that was, physically and emotionally draining. Sometimes we see people come in, they do a financial plan, and their financial planner shows them how to protect what they've done so that they don't work their whole lives and then have a health concern that drains all their assets down. So putting something in place that can protect that and leave their loved ones with an inheritance is important to them.
Yeah, we've heard that a lot of times, right? Like a long-term care event could be what derails even a sound retirement plan or strategy, if we don't have that in place. So Ryan, good segue into that. What are the alternatives of not having a long-term care policy? What are those clients looking at if they do have a long-term care event, which we don't know when that's going to be, if that's going to be? What are the alternatives? How are they affording that and paying for it?
So you can either self-insure by spending down your assets, or you can rely on a family member. Those are really the only two other options until financial aid comes in, but you have to spend down almost all of your assets before that happens. So most people want to avoid that, and they want coverage in place.
Yeah, scary thought, right? We've worked so hard, we've accumulated all this, net worth that we think is going to be passed down, and then we can't, right? We're spending it to take care of ourselves.
And it's easy to happen, and it happens quick. The average nursing home is between $8,000 and $9,000 a month. So if someone finds themselves in that situation, it is their life's work can be used up pretty quickly.
Yeah. And I've heard that the best way that was explained to me one time was you can have a plan by design or a plan by default.
Yeah.
And the default plan is, depending on whatever state you're living in and what their rules are and their spend downs and the cost of care and how the quality of care you're looking for will be your default plan, and what that's ultimately going to look like in your later years and what you're going to leave your family with. Ryan, so we have, high level speaking, right, two types of plans that we're really talking to clients with. One is a traditional plan. We're seeing fewer and fewer traditional plans out there, but we still have some carriers that are selling. And then we have like a hybrid plan, a combination of life insurance with long-term care riders attached to them. Let's talk about some key differences between the two.
Okay, so traditional long-term care is basic. You are paying for long-term care coverage. It is the most cost-effective way to get long-term care coverage, which is why a lot of people opt for it. Typically use it or lose it. Sometimes you could add a death benefit rider, but most of the time we're not looking at that. Yeah, it's long-term care coverage, and that's it. The other type is life insurance. Those types of policies have a death benefit associated with them. What's attractive about those policies is you are getting some leverage there. You are creating a pool of money that someone's going to benefit from. Either your loved ones, if you pass away peacefully in your sleep at night, they will get the death benefit, or if you need long-term care, it'll help fund that cost. So it is creating leverage on your money that will be paid out at some point in time. But again, because of that, it is a little bit more expensive than traditional long-term care.
Sure. Nice thing is that they have options, and we can find something that hopefully fits into their budget to protect against everything that we talked about. Yeah, this is great, Ryan. If an agent wants to get in contact with you, number one, how do they do that? And two, if this isn't something that they're comfortable talking about, right? Talk about how you can you've worked with agents and clients in having these conversations and leading up to these sales.
So just last week, I had an agent reach out to me, give me her client's name and number, said he was interested in long-term care, and we just scheduled a call. And I did a few calls with him, find out what he was looking for, what was important to him, what his budget was, and drew up some designs for that client. So I'm happy to do a call directly with the client or with the agent on the line with the client, just to do a group call and learn about the client, what they're looking for. They can reach out, lifesales@riskassociates.com, or call me 914-372-2896.
Perfect. Yeah. And hopefully you understand that we can be a resource for you. Talk about that. We can run illustrations for you. Talk about the concepts, or even hop on the phone with your clients and make sure that you feel comfortable and that your client trusts, everything that you're saying there. So once again, lifesales@riskassociates.com for any quotes, with any products that we have. Give Ryan a call directly if this is something that you're interested in taking him up on. As always, follow us on YouTube, follow us on LinkedIn, go to riskassociates.com, view our marketing page for all of these materials. Hopefully they're helpful for you, and we'll see everybody next time. Ryan, thanks a lot.
Thanks, Ted.